Unfortunately, the existing home market is behaving exactly like I called. We just got the March numbers, and they are bad, bad, bad. March existing home sales worse since 2009. This is not a period you want to be compared to. Again, folks, to be clear, I am calling 2025 to be the cycle low. I'm calling it for to be sub 4 million when all the dust settles. So, Dustin, I assume that it's wild times in the mortgage market, given what's going on in existing home sales.
Yeah, absolutely wild times. It's extremely volatile. It's unpredictable, and I was saying this to you before. It's one of the times right now where, for the last 4 or 5 years, as we've been watching the volatile mortgage rate industry market, there's always kind of one headlines that will kind of take the precedence. That's really driving treasuries, really driving rates. I don't think it's a secret right now that Trump and the tariffs are kind of driving those headlines right now. Everything else kind of behind the scenes is still
Well,
there, but
yeah. So let's just go a little bit level deeper because you're in the mortgage market. I think it's more than that. I think what's going on behind the scenes is we are having a referendum on investing in U.S. assets and U.S. capital. We clearly have some countries selling treasuries, which again, if you put something on the market, rates got to go up to move the inventory. That obviously impacts mortgages. But I think there's even a bigger trend, which frankly is frightening. If we see foreign entities reallocate 10% less capital to the US, we could be on the path to 5% 10-year, 5.5% 10-year. And I've actually heard multiple financial experts say that 6% 10-year is not out of the question.
no.
That is frightening.
I mean, you nailed it on the head, and I think it goes obviously hand in hand with what Trump's doing is part of the reason why there's so much out of or foreign money that's deciding that, hey, I may have been too exposed to the US. Now I want to take it out. I'll give another example about a client I had a conversation with yesterday, but to keep going on this exact topic, it's simple supply and demand, right? When there's going to be the same amount of supply but less demand, what do you think is going to happen with the treasuries? And the treasuries are going to be the benchmark that we're so used to having rates tied to. I've got a couple of spinoffs that are interesting, but that's exactly what you said, right? With a lot of people, whether it's foreign money, even domestic money,
Yep.
that feels too exposed to the US economy and wants to take their money and allocate it somewhere else, that's going to cause issues with the treasury yields.
No, I again, folks, this is all going on in the NFL. There's this saying, "Don't damage the shield." The shield is the brand of the NFL. What we have done is we have clearly damaged or tarnished the U.S. brand. You can argue whether that's good or bad. I don't care. But when you damage the brand, you're changing allocations. And in a market where you are the deepest asset base, a simple 5 to 10% asset allocation difference is going to change the price of assets. For example, ECB, European Central Bank, said we were over invested in U.S. assets. We now will move to neutral. What the hell does that mean? That means they're pulling dollars from U.S., putting them elsewhere. And more importantly, they used to put, 60 cents of every dollar in the U.S. Now it's going to be 48 cents. That will make a difference. To your point about U.S. citizens, there was an article in CNBC about 3 days ago I read that more and more wealthy, the 1%, the 10%, are opening Swiss bank accounts. Do you think they're moving their dollars out of the U.S. because they're happy or because they're scared or over-indexed on U.S. assets? Folks, this is impacting lots of things. When you see the 10-year potentially go up to 5.5%, 6%, it will make my call of 4% existing home sales become a layup. And again, the numbers for March are horrific, worse since 2009. But let's switch gears because myself, this channel, Convoy, we predominantly speak with investors, also homeowners that are willing to do some work. I want everybody to realize that less demand, more supply, more motivated sellers means you can do great deals. And I'm actually changing it up. I want people Dustin, to think about doing the deal of the decade in
I love that.
2025. That's what this is about. Go get yours. I believe that you can find the deal of the decade every single year. And I know people can do it in 2025. More supply, less demand, more motivated sellers. And the final point before I throw it back to you is I do not give a rat's ass if mortgage rates are 9% or 10%. I actually see that as a good thing because more people will be scared, less competition, and I will just go ham because I've done it before. When everybody was on the sidelines, I jump in and it will happen again. So, what do you think of all that?
I think you nailed it on the head once again. No surprise there. But the main thing that, like, if you have an iPhone, you have any sort of new modern, Samsung Android, that's the word I was looking for. You're going to get 10 notifications, okay, every single day about a doomers type post regarding the mortgage or housing market, right? But if you're in this community, if you're an investor, that should just be like Christmas morning every morning, right? You should be
Exactly.
stoked when
Christmas
you see
morning.
that.
Yes.
It's do you want competition or not? I don't care if it's mortgages, sports. Sports, you kind of want competition. I'll take that
A little bit.
analogy back.
But I don't want a
But
football game breaking out in my basketball game. The freaking Rockets
exactly,
Warriors. It's a freaking football game now. That's horrible
last
basketball.
night,
Oh, it's
yeah,
horrible.
they got this channel is supposed to be real estate specific, but that was that was
Right turn.
a fun
Right
end
turn.
to the game. But no, as investors, everybody should be ecstatic. Everybody should know, and they probably already do, especially if you're in this community, that now is the time where you're going to get that great, best deal of the decade, like you just said, because the market's allowing you to do that. There's so much less competition that you should be able to go to the sellers and get a much
Yeah.
better or bigger credit. You should be able to get the actual offer accepted price way below listing price, right? All of those things to ultimately make you get that deal of the decade.
No, folks, this is the name of the game. I've said it all year and I'll continue to say it. 2025 is the year of the investors. Everyone else in the real estate market is going to have a shitty year except for real estate investors because we write deals that cash flow day one. We simply don't care about the cost of capital as long as it's the same for everyone else. And we are willing to write disrespectful offers. We are willing to follow up 15 times if that's what it takes. 2025 is going to be an amazing year for investors. And the reason I like working with Convoy is you offer up so many different ways people can get into the game with DSCR, lending, and the like. What are some of the exciting programs that are still running?
So I don't know if this would be necessarily exciting to the masses or anything that's like a new program to get people on. Now, one thing I wanted to highlight on earlier, talking
Mhm.
about the treasuries, is we've seen this before, but our biggest takeout partner, the biggest hedge fund that we sell to, okay, on Monday, John may have brought this up last week. I don't know, but is moving to the SOFR, the standard overnight
Mm.
financing rate, away from the 5-year treasury. So what does that what does that normally kind of tell me in my mind is, the SOFR is just an overnight rate, right? There's a little
Yeah,
bit less risk for the market makers compared to a 5-year that's putting a projection on where
right.
obviously the next 5 years are going to be. So hedge funds understand how volatile the current market is, which is why they're going to the SOFR. But I can
Mm.
tell you that the SOFR spreads we're going to be able to get are going to be smaller,
Mm.
allowing us to at least be more competitive on the DSCR side, as conventional rates will ultimately follow the 10-year treasury like a ping pong match, right?
Mm.
Um,
Yeah,
but to make that move is kind of a big statement,
yeah.
given that they've been doing this for 3 years off the 5-year, and they're like, cutting it, we're going to the SOFR now.
Now, I don't know what the SOFR is this morning. Can you give us an example of what the 5-year might be this morning in SOFR? Just coincidence? I don't no idea.
I think the SOFR is at like 4.2 or 4.3, 4.25, something like that.
All right.
The 5 years at 3.95 or what
Okay.
have you. So you can see that
Yeah,
difference
roughly speaking.
overnight.
Yeah. Yeah.
They're
Okay.
close. The main thing is that we're going to be able to get the spreads
Right.
between the rate we
The mar
offer and the
the margin.
SOFR smaller because the risk for the market maker or the hedge fund is less because their money isn't tied for 5 years.
I love
That's
that.
the bigger play there.
No, absolutely. This is why you got to work with folks like Convoy, is one of the biggest DSCR lenders in the country. They have access to market makers and lots of funds. So again, you need to give them a shot. If you are an investor taking advantage of 2025, like I hope you are, you need to have Convoy in the Rolodex. How do they get started?
Just go to convoyhomeloans.com. There's going to be a little drop down menu to say where you came from. Just mention you came from ORAP, please.
There you go. Thank you. And again, you tell them that you get to speak with this young man or his partner, Jonathan. Otherwise, you're just treated like everybody else in a queue, and that sucks. Nobody likes lines. Take care.